Let's start off with the first stock of the evening. Group 5, the company out with results today. The first half diluted headline earnings per share fell 44% to 130 cents. The construction group's revenue from continuing operations was down 4% to 4.4 billion rand. The group said that its total secured construction order book stands at 10.3 billion rand, while the value of the group's pipeline stands at 144 billion rand, up from the 134 billion rand at the end of the previous financial year. Group 5 expects a slow recovery in activity levels in the second half of the year, while high activity levels are only expected from next year. The group declared a dividend of 22 cents per share. Again, gentlemen, I welcome you. So both of you, I think this time last year, if I'm not mistaken, this was the time when both of you were saying this is the right time to buy into the construction industry. So let's start by just asking this. Simon, how are your construction stocks doing?
They bought me about half a can of Coke last year. they've gone nowhere. We were early to the party. We were saying before we went on air, it's the really smart folks who are early to the party.
Very early to the party. So early that you might have to leave sooner than later. Tell me, Tshepo.
Not leaving anytime soon.
Yeah.
It's a party. I'm going to be that guest that just doesn't leave.
So Group 5, you own Group 5. Cannon Asset Managers holds Group 5. Disappointing set of numbers. But the order book, would you say, is it looking stronger in your mind?
Look, I think it's a painful time for Group 5, in particular, the construction sector as a whole. There's no two ways about it. I mean, earnings down 44%. But strangely enough, when you go through the commentary, I'd read this latest set as slightly more bullish from a generally bearish management team. I think if you're looking at the South African construction industry as a whole, it struggled, and Group 5 is just a reflection of that. So there's one or two positives to take out of these numbers, but it really is a reflection of how hard the
But again, I mean, the company's saying that a real recovery is only really going to be experienced beginning of next year. We had Jacob Zuma, the State of the Nation address, Simon reiterating something that we've been hearing for many years, that infrastructure spend is imminent and it is on its way.
We've been hearing it for 3 years. Minister Gordon and before him Minister Manuel would stand up at the budget speech and tell us about this approximate 800 billion that they were going to spend on infrastructure. And you speak to the CEOs and it just absolutely isn't there. I think that the fact that it's shifted to the State of the Nation address means that it's now much more centre and square for government. President Zuma's State of the Nation was less specifics, like he's in the past said 1 million jobs and all of that sort of stuff. But it was very much, I mean, he's talking about corridors, he's talking about universities in that sense. I think it gives more focus. We know the money's there because it's been there every year and unspent. So I think what we're going to see from Minister Gordon will be a sense of what they're planning to do with it, some hard stuff on the ground. But I think to your point, we're not going to see it flowing this year as in 2012. It's going to be a bit of a process. But much as both myself and Tshepo were early to the construction story, I mean, the stocks are going to start moving ahead of that.
What convinced you to get in so early though, Simon? And I know you don't own Group 5.
I don't.
You have preference of other stocks. But why were you so early to come to this party?
I mean, what I try and do is find sectors that have been absolutely beaten to a pulp, let them wallow down at the bottom for a time and then get into those sectors. And that strategy of investing means that what you're trying to do is kind of catch the bottom of the cycle, which is going to run for 3 to 5 years potentially. It means that you are nearly always early. It's not an untypical scenario to get into a sector perhaps a year or so early. What we do see is that your downside is fairly limited because they're absolutely battered to heck and gone. And then when they start to move and then everybody else is suddenly interested and excited and rushing in, that momentum carries you. And what I'm doing is scaling in. I'm only sitting on one stock. I've got a couple more. Yep.
Okay.
When they move, we'll look at them.
All right, so let's also just take a look at Group 5 as to why you bought Group 5 last year. Some would say that rather look at the businesses with a better margin. WBHO seems to also be one of the favourites because of a better margin. Why did you opt for Group 5?
Look, I think there's a handful. It's one of those sectors where you could probably pick 4 or 5, really.
Almost anything but Murray's.
Based on valuations. And you could make a very good investment case for it. Why Group 5? Look, over and above the sector that's done badly and is trading on very good valuations, what we believe in is the African growth story. And the African growth story is really informed by what the growth drivers have been in terms of this continent over the last 10 years. So if you look at 5 of the fastest growing economies in the world over the last 10 years, it's actually been sub-Saharan African countries, and we'd expect that pattern to go forth. And what those countries need is a strong amount of infrastructure spend, and Group 5 is one of the local players that has a larger African exposure than most. That coupled with the fact that this is, whilst we all talk about these as a dog sector, these are companies that have been around for many a year, have gone through many a cycles, and are fundamentally at the core very good businesses that are trading at very decent multiples, and Group 5 is that in particular.
Okay, so we know that both of you were a year early to come into the construction sector. The question is, were you 2 years early to come to the construction sector? 44% down on the headline earnings front. I mean, could we see more of a loss for the likes of Group 5?
I think we're seeing a bit of a glimmer, and let's not get overly excited. We could be still yet earlier. I mean, we're the folk who arrives a day early to the party, in truth, and then, as Tshepo says, stays late. We saw the cement sales out. You were talking, I think, on Friday with Paul Theron, and of course he says PPC is the best stock in the whole wide world. After
cement sales up around 20%.
22% year on year. That's the first glimmer. We're seeing cement starting to edge up. I think we've seen the first glimmers. I'm also taking a lot of heart from the statement from President Zuma last week, in the sense that things are starting to happen forward. Are we going to see another 44% down next year? Short answer, no, I don't think so. I think Group 5 directors and CEO and the like have typically been, they're not the sort of guys who've gone out there and told the world that everything's going to be brilliant. They've been fairly realistic. We're almost getting a sense from my reading of this set of results that they're saying, yeah, look, it's kind of okay, things are kind of turning. We're not going to see massive numbers next year, and if we see growth, it might still be single digit. But certainly I think that the real bad stuff's all out of the way. They've sold a lot of stuff. They made the classic mistake at the top of the cycle. They rushed off, they bought a cement and aggregate business, and now at the bottom of the cycle they're selling it. And they admit quite plainly, they say it has been a destruction in shareholder value, it has been a painful, hard lesson. And those are the sort of things that worry me, where the companies rush off. I mean, everything's going great, they're off buying things at massive price, and at this point now they need to exit.
I mean, shouldn't they just be holding on to this asset, Tshepo? Bottom of the cycle. I mean,
look, again, what we're seeing in terms of a lot of businesses that have had their fingers burnt, they got exuberant and went out and bought all these assets. What we're seeing is a refocus in terms of what's core and what's not core. And I think Group 5 is following in that extension and selling off non-core businesses. So I think that works quite nicely. If I can extend to the point of when is it going to turn, I'll be impressed if Simon can tell you. I can be impressed if anyone really can tell us when the construction industry will turn. And because it's so difficult to time when it will turn is why you should be getting in at very good valuations.
I heard the story beginning of last year, so I'm going to reluctantly ask, hot or not for Group 5? And I know Tshepo last year would have said steaming hot. Is it steaming hot still for you now?
It's steaming hot for me. You might take a bit of pain over the next 6 months or so, a bit, again, on a long-term investment view, and all investment views should be long-term.
Absolutely. So let me ask you this. If things go pear-shaped in the Eurozone, where does that then leave the construction industry?
Again, our view on the Eurozone is that it's likely to go sideways for the next 10 years, right? So our base case isn't that it's going to fall apart. And if it does fall apart, then the construction industry is in trouble. But you can probably apply that for most industries around the world, to be fair. So our base case is Europe goes sideways, but the growth drivers over the next 10 to 20 years are going to be your dynamic emerging market economies. And from that, you'll have a lot of demand for infrastructure spend.
Simon, hot or not, Group 5?
It is. It's not my top pick in the sector, but in this episode, I mean, there's almost anything that you can look at in the sector.
You own Stephanie's.
I got Steph stocks, and that was my early call. The other ones on my shopping list I like Avenge, Afrimat when we get a little bit further down, although we need to find out what's happening with that N12 Winelands toll project, which is Group 5 has got a foot in the door there, but that's now gone back to court, and we know what's happening with toll roads in Gauteng. I like it, and we're early, and we don't know when it's going to turn. I think we know when the top is. I think the top is when they start going and buying non-core assets. When they're rushing out and giving good reasons to buy things that are not core to their business, it's time to exit. That's a long way away.
Okay, so hot from both of you.